Welcome back, entrepreneurs. Today, we're diving into the world of financial education and exploring the invaluable insights of renowned investor, author, and entrepreneur, Robert Kiyosaki. If you're passionate about business, money, and psychology, you've come to the right place. Make sure to hit that subscribe button and ring the bell icon to stay updated with our value-packed videos. Now, let's jump into my take on Kiyosaki's top rules of money. Rule 1. Know how to separate an asset from a liability. Kiyosaki's first rule is simple yet powerful. Understand the difference between an asset and a liability. Assets make you money, while liabilities drain your money. The wealthy focus on acquiring assets and limiting liabilities. But here's the twist. Sometimes, an apparent liability can turn into an asset based on your financial goals. Imagine buying a house. Initially, it may seem like a liability due to down payments, mortgages, and taxes. However, if you strategically upgrade and flip the house for a profit, it becomes an asset. Kiyosaki emphasizes that cash flow is essential in determining whether something is an asset or a liability. If it generates consistent income over time, it's an asset. Rule 2. Understand the different types of cash flow. Kiyosaki categorizes income into 4 types of cash flow: employee, self-employed, business, and investor. These categories reside within what he calls the cash flow quadrant. Each quadrant has its own rules and mentalities. Employees trade time for money, but it has limitations. The self-employed may earn more, but they still trade time for profit. The goal is to transition to the business quadrant, where the focus shifts to building systems and hiring others to generate cash flow independently. Finally, there's the investor quadrant, where people use money to create more money. Understanding these categories helps you chart your financial path. Rule 3. Understand taxes. Taxes, a significant expense for most people, differ based on which quadrant you're in. Employees have limited control over their taxes. Self-employed individuals can have higher taxes but also enjoy deductions on business-related expenses. Large corporations often benefit from tax incentives and deductions provided by the government. Kiyosaki highlights that the wealthy focus on building equity and leveraging tax benefits. For instance, real estate investors can claim deductions on depreciation, mortgage interest, and property expenses, effectively lowering their tax bills. Understanding taxes and leveraging them can make a substantial difference in wealth accumulation. Rule 4. Use debt to make money. Here's where it gets interesting. Kiyosaki discusses the concept of good debt and bad debt. Good debt allows you to leverage assets and accelerate wealth creation. Investors often use other people's money to acquire larger assets, while the debt is paid down by others. Let's say Tom buys a property for $1 million and sells it for $3 million. Instead of paying capital gains tax, Tom reinvests that money by borrowing $7 million from the bank. He uses other people's money to own a bigger asset, creating substantial monthly cash flow, while the debt is paid off by the income generated. Rule 5. Learn to protect your assets. Building wealth isn't just about acquiring assets, it's also about protecting them. Kiyosaki emphasizes the importance of asset protection strategies to safeguard your hard-earned wealth. One common approach is structuring your investments through entities like LLCs, limited liability companies, or trusts. By doing so, you create a legal separation between your personal and business assets, which can shield your personal wealth from potential liabilities in the business realm. Additionally, diversification plays a crucial role in asset protection. Spreading your investments across different asset classes, such as real estate, stocks, and businesses, reduces the risk of losing everything in a single investment. Rule 6. Embrace financial education. Kiyosaki's final rule is perhaps the most fundamental one. Embrace financial education. He believes that schools focus too much on academic education but fail to teach practical money management skills. To succeed financially, you must invest in your own financial education. Read books, attend seminars, and surround yourself with mentors who have achieved the financial success you aspire to. Continuously learning and improving your financial literacy will empower you to make informed decisions and navigate the ever-changing financial landscape. And that's a wrap on my take on Robert Kiyosaki's top rules of money. I hope you found this video insightful and inspiring. Remember, Financial success is within your reach if you apply these principles to your life. If you enjoyed this content, don't forget to give it a thumbs up and share it with your fellow entrepreneurs. And as always, stay tuned for more valuable content coming your way. Until next time, keep hustling and keep growing.